GMM Pfualder, that's the one which is in the spotlight after its earnings. So let's welcome on board Tarak Patel, the MD at the company, joining in on the show right now. Tarak, hi, morning. It's been a blowout quarter for you guys. The revenue has grown, margin has expanded considerably. What are the levels and what are the triggers?
Yeah, sure. So this has been a very good quarter for us. Definitely, we had a good amount of revenue. We're building on a strong Q1 that we had, and this puts us in a really strong position to end the year in a very strong manner. However, the profit improvement, came from basically three areas. One is basically incremental revenue, the second being operating leverage, and three, some of the synergies and some of the initiatives that we've started a few years ago are finally paying off. We definitely had a lot of Glassline business sales. That's an area where we do make a lot of margin, and that's an area where we did extremely well this quarter. And in the Glassline business itself, we had a good mix between reactors, tanks, and spare parts, and that definitely added to the improvement in margins. We also saw a significant reduction in raw material prices and in power and fuel. So gas prices have come down, and the metal prices for carbon steel have reduced over the last few months. So we are seeing a benefit on that front as well. Going forward, we expect these margin profiles to continue. We have two new gas furnaces that are going to come online, or have come online in the last week or so. So we expect for the next 6 months, we can now switch off our electric furnaces and then have all the production coming through the gas furnaces, which are obviously a lower cost than the electric furnaces. We also have Hyderabad facility up and running now. We actually completed our first equipment today, so we will be able to start shipping equipment very shortly from there. So the next 6 months looks very, very bright. I expect the next 6 months to be much, much stronger than the first 6 months of this financial year.
Sure. Tarak, the new Hyderabad facility, wanted to understand the deliverables here. How much revenue can you add this year? How quickly can you ramp it up to high utilization levels? And what's the revenue potential that you see for this particular facility, say 1 year down the line?
So Hyderabad facility will take some time. We are getting the people organized. We have a bunch of workers already on the ground. We need to hire some more people, but we expect about 30 crores of revenue in the next 6 months, about 200 units. I think on a yearly basis, their capacity currently is about 400 units. But once we go in there, we do want to make some changes. We want to add a little bit of capex, reorganize some of the factory flows and things like that. We do hope to improve the output from there, but currently we can target at least till the end of March this year that we can expect another 30 crores odd of revenue coming from Hyderabad.
So in which of your customer segments are you seeing the highest capex? Given that the capex cycle has been going on for a while, is there now a risk of slowing down, or is the order book outlook still looking robust? And pharma versus chemicals, in terms of those two sectors, which do you see growing faster?
So chemical has been driving our growth for the last maybe 3 years or so. Pharma has been a bit subdued. However, we're seeing pharma pick up in a big way. Pharma for this quarter accounted for nearly 45% of our revenue. It was down to about 30% for the last few quarters. So significant improvement there. We're seeing definitely alternative to China. We're definitely seeing people looking at creating local supply chains. So pharma is picking up. There's a lot of talk of new investments coming in the south of India. Some of the players here in Mumbai and North India are also looking to invest. And what's also kind of heartening to see is internationally we're seeing a lot of traction as well. So our Swiss subsidiary Mavag currently has an order backlog of close to 20 million Swiss francs. Unheard of in their lifetime. They've never seen such a large backlog. It's usually in the 10-11 million range, so significant improvement there. We believe that internationally countries are looking at creating redundancies in Europe and in the US, and we'll see some of that traction kind of result in more business for us as well.
So how is the acquisition panning out then? When can we expect it to close, and when will you see the revenues here consolidate?
Sure. So things are going on very smoothly. We've already finished the antitrust application. The next in line is the FDI application and the CFIUS US application. We expect to close this transaction sometime in the middle or the third week of December. If everything goes as per plan, we will start consolidating the international businesses revenue with GMM Pfualder's revenue from January 1st. So Q4, we should be able to consolidate completely.
Sure. What's the revenue and margin guidance that you can give us for FY21? And can the Q1 run rate sustain, or can you improve upon this?
So in terms of margins, I'm quite confident that we can maintain a similar level of margins that we currently have shown in Q2, maybe a slight improvement as things look, as we have the new gas furnaces, some good export business, improvement in spare part business also coming in. So very similar guidance in terms of what we achieved this quarter. From a revenue standpoint as well, I think we will do quite well. I mean, we did lose a bit of revenue in Q1, but hopefully over the next few quarters, we will make it up, as well as the Hyderabad facility will add about 30 crores as well. So overall, quite positive on the business. I think the industries we cater to, both chemical and pharma, are doing well. And I think we've reached a kind of momentum that from a production standpoint will keep going.
Tarak, great to have you on the show and get in some clarity on your earnings and the performance going forward. Good speaking with you. We're going to wind it up on this edition of The Market. It's a goodbye from Mavag and me. And as we say goodbye, hear it out, Nivesh Ke Fund Day, this time around on market volatility.